Welcome to This Explainer. Okay, today we are totally rethinking how we look at money. We're going to break down the quiet, absolute superpower of personal finance, compound interest. And we're going to explore why starting today, like right now, might just be the most lucrative decision you will ever make.
Okay, let's dive into this. We're pretty much taught our entire lives that saving is the ultimate safe bet, right? But keeping your cash idle under a mattress, it's actually actively making you poorer. Why? Because inflation eats idle cash every single day. Your savings are literally losing purchasing power while they just sit there doing nothing. Saving merely protects your baseline, but it puts a hard, absolute limit on your actual financial potential.
So let's get into Section 1, the trap of waiting and the invisible cost of delay. If you're living paycheck to paycheck and delaying your investments, you need to know you're carrying a massive, invisible penalty. Look at the two paths here. On the left, saving money simply establishes a baseline, but over time, it physically loses to inflation. Now on the right, investing money actively puts your cash to work and actually grows your capital. The gap between these two paths isn't just a few bucks here and there. Over a lifetime, it's literally the difference between constant financial struggle and total financial freedom.
Delaying investments costs you fortunes. Let that sink in for a second. This is not an exaggeration. Every single year you delay, you are literally sacrificing millions in future wealth. These lost decades are an invisible cost that most people don't even notice until it's entirely too late.
To put a name to this whole phenomenon, we have to talk about opportunity cost. The definition here is super key. It's the potential future wealth you lose when you wait to invest today. You see, every single spending decision you make is a trade. That $50 takeout order tonight? That is secretly a $1,000 dinner in retirement. The real cost of waiting is the thousands you sacrifice by not letting time compound your money.
Which brings us to Section 2, the wealth cheat code. And guys, this is about so much more than just math.
Here it is, compound interest. This happens when your initial capital earns steady returns, and then, this is the absolute magic part, those returns earn more returns. It's a literal cheat code because it does all the heavy lifting for you. It allows small, everyday amounts of money to snowball into millions. Your balance stops growing in a straight line and starts growing exponentially.
So, the crucial point is, the secret ingredient to this cheat code isn't some lucky stock pick. It's not having a massive six-figure salary. It is pure, uninterrupted time. Time is the engine of compound interest. The longer you leave that engine running, the more massive the results become.
Moving to Section 3, time always beats timing. Because time is your ultimate leverage, and we're about to totally bust the myth that you need a lot of money to start.
Picture a dark, cinematic split screen for a moment. Let's look at a classic matchup. On the left, we've got someone who starts at 25, investing incredibly small amounts early on. On the right, someone who starts at 35, waiting until they have big chunks of cash to invest late. It's the age-old battle, right? Small and early versus big and late.
Just look at the sheer difference in trajectories here. For the 25-year-old starter, you get this neon green line that starts out flat, but then absolutely explodes vertically, resulting in this massive giant pile of gold. Meanwhile, the 35-year-old's final stack is completely dwarfed, even though they invested much larger amounts of cash later on. The mathematical reality of time-leveraged wealth is just undeniable.
And this brilliantly illustrates an undeniable truth. An early saver investing small outperforms a late saver investing big. It proves that time is your absolute advantage. It is your ultimate leverage. You simply cannot out-earn lost time, no matter how big your paychecks get later in life.
Now for Section 4, surviving the flatline, otherwise known as the invisible phase. Let's slow down a sec because we need to set some real expectations here. Let's walk through this timeline carefully. In year 1, growth starts out deceptively slow. I mean, by year 5, it almost looks totally invisible. You might genuinely feel like you're making zero progress. This is the flat line, and it is exactly where most people just throw their hands up and quit because they lack patience. But if you hold on to year 10, you really start building momentum, and by year 30, the curve explodes vertically.
Growth starts deceptively slow. Then it explodes vertically. I want to be clear, this slow start is not a bug in the system. It is a fundamental feature of the math.
Boring consistency and those simple daily habits during that flat line are exactly what load the spring for that future vertical exponential explosion.
Patience is highly rewarded. Most people quit during the invisible phase because it just feels like nothing is happening. Don't be most people. Compounding strictly rewards the long-term players. If you stay consistent, the math literally guarantees your wealth.
Which brings us to our final part, Section 5. Start with zero today. Because action kills fear, and waiting for the perfect time is a trap.
I absolutely love this quote from our source material. Waiting for cash is a mistake. The hardest part is starting. Delaying just severely limits your early growth. Taking action is what actually creates financial clarity. You do not need millions to begin. You just need to break the inertia.
Now, what's really interesting about this slide is how surprisingly simple the actual steps to start are. Step 1. Secure your financial baseline by eliminating that high-interest consumer debt. Step 2. Learn the absolute basics of investing so you know exactly what you're buying, like simple index funds. And Step 3. Invest tiny amounts weekly. Just set up an automated system and let it run in the background.
Yes, literally just $5, the price of a fancy iced coffee. But investing that first $5 starts compounding immediately. And honestly, more importantly, it builds instant mental momentum. It destroys your financial fear, it kills the overthinking, and it flips you from being just a consumer into being an owner.
So, I leave you with this final, provocative thought. What is the true cost of waiting until tomorrow? Every single day you wait, you are trading away the exponential top of that growth curve. Stop overthinking. Start today. Let time do the heavy lifting, and relentless action will absolutely build your financial freedom. Thanks for watching, and seriously, go start your snowball right now.